welcome to the special episode of the Future of Money podcast on this special series called The Future of Crypto Compliance. Today, we're joined by Sean McHugh, a senior director and head of market assurance at Dubai's first crypto regulator, the VARA, the Virtual Assets Regulatory Authority. In this episode, we're going to really deep dive on the challenges facing the crypto regulatory ecosystem right now, and how can the regulator of the future look like, especially when you look at how the crypto ecosystem is evolving. Hope you enjoy this episode. Sean, welcome on the special episode of the Future of Money podcast and the Future of Crypto Compliance.
Thank you, Henry. I appreciate it.
Sean, you've been now with the VARA, the world's first crypto regulator, for over a year and a half now. What is the biggest challenge you've seen as being a crypto regulator?
Sure. So it's such an evolving kind of space that it's actually different than it was a year and a half ago when I set foot here. I was relatively new to the space, so kind of learning about this part of the world, learning about the types of compliance challenges. I'm a lifetime TradFi compliance officer, so there's been some commonalities around that, but a big part of the challenge has been how do we regulate, how do we license and supervise firms with different business models, different tech. We try to be agnostic around the tech and the business model, but we do have true north around governance and certain compliance things that we look for everyone. So trying to I always say diagnose the patient and really try to understand the VASP, understand what they're doing now, what they plan to do in the future, to try to get a sense of is their control environment scalable.
What is the biggest challenge, like when you're looking at these different VASs that are coming in? Is it their business model? Is it understanding the team? Is it understanding what the roadmap will be? Like, have you found is the most difficult?
Yeah, I'd say understanding the business model and not just on day one, but aspirational, because we try to we're not going to take a snapshot. I run licensing, supervision, and a blockchain analytics team. So once someone gets licensed, they graduate to supervision. So at the licensing process, it's can we license them based on what we know now? But on supervision, we want these firms to grow and be commercially successful, and we want guardrails to make sure that they don't trip over. But setting up guardrails in an industry, in an ecosystem globally that's evolving at almost light speed can be a challenge. So we try not to be too prescriptive in terms of the rules and the guidelines that we put out. Having said that, we're very focused and prescriptive on what we expect from their compliance program.
You mentioned obviously licensing, supervision, and blockchain analytics. Can you share more about that part, because that's obviously very unique to a crypto regulator?
So one thing that's very unique for us, and you're familiar with this, is when we're in the licensing process, we want customer deposit wallet addresses to be shared with us by a licensee. Mm-hmm. And what we do there is we use a number of tools, and I won't talk about particular tools here, because I don't want to look like I'm
promoting endorsing one. Yeah,
exactly. Everyone should do their own due diligence. There's lots of great tools out there. But I'd say we take those wallets in and we try to get a sense of how healthy their customer business is, how many hops away from certain wallets we might have an issue with. Going forward, once a VAS is licensed through supervision, we ask for that same information every week. So we're able to kind of put a lot of these pieces together, and also often, quite honestly, maybe help the VAS make sure that if they've not caught something, we may ask, well, okay, explain to us how you use a particular tool or how you do surveillance. And we did find once where we replicated there's a firm trying to get an additional license for retail. We replicated some of their compliance. We found that they were closing out alerts either sloppily or they didn't have someone who understood how to use a tool. So we went in, they were doing an inspection, and had them do a remediation plan around that.
Wow. Because what's interesting here, Sean, is you have almost on a live basis an idea of what the risk is of the different VASP in the crypto ecosystem at least from a crypto transaction monitoring perspective. That must be very interesting, because you really can see the whole overall metadata of where risk-wise, where you guys are sitting.
Yeah, that's right. I'm always a little, I grew up in firms that had a kind of a culture of anxiety. So I'm always worried that I'm missing something, right? So I don't want to get too comfortable around what we see, but yeah, we do have a pretty decent dashboard around that, and we're now getting more involved in like market misconduct and market manipulation, that sort of thing.
Interesting.
That's a bit of a challenge in our space because it's distributed and it's decentralized. It's not like you can go to the New York Stock Exchange and get a feed, right? Yeah. So this is I'm trying to focus on event triggers, manipulation of tokens and stuff like that. I want to get to the point where we look at, how people are handling margin, especially on retail.
That's very interesting. So on that point, because I agree with you, when I look at, let's say, the risk that the crypto ecosystem is facing, I'm not too worried about another like FTX event happening because there's so much now. Yeah, hopefully not, but like there's so much transparency now and proof of reserves, and nothing is perfect, but there's more transparency now than it was the case 2-3 years ago. But I think you're right. There's, from a market manipulation perspective, misconduct. These are still very difficult to easily monitor. Like, what do you find is the best solution around those? Is it better supervision, surveillance, or actually it's the company culture, the VAS themselves have to put in the right guardrails to ensure that these things don't happen?
Yeah, our expectations, especially for exchanges, is that they're going to have a top flight kind of compliance program with the tools, but also, there are certain tools that a lot of people use. Those aren't safe harbors either. As I mentioned, we went in and saw that someone had a tool that you'd be impressed with that a lot of people use, but they weren't using it properly. And so, we do testing around that. We want to make sure, okay, how to use it? What's the caliber of the compliance officer? So we do a fit and properness check for the chief compliance officer, but we also expect them to have enough people to prosecute the business, but also to kind of control the business that they're doing. And so we're not holding a startup to the same scalable model we would hold like some global trading platform, but we want to make sure that their control side is keeping up with their commercial ambition. So I do think it's best for right now. We'll go and do an inspection and say, okay, walk us through your surveillance program, your transaction monitoring, your AML and KYC type of process. Over time, I want to be able to take feeds so we can do some of this on our own, and maybe even kind of look to see if there's manipulation on platform A that triggers trades on platform B.
Yeah, absolutely. Because I can see that happening. Between exchanges, it's happening. I just want to touch on one point you mentioned on transaction monitoring. Because then I think you're right. A lot of crypto companies will say, I'm going to use transaction monitoring tool A. And so I've ticked that box. But actually, you can have crazy alerts and just basically shut them down. And at the same time, you can also have tons of false positives and not be able to address them. From your experience so far, what have you seen is the weak point with crypto firms? Is it that they're policies they put in is on these transaction monitoring tools are a bit too lax? Is it they're closing down alerts very quickly? Is it they're not doing the SAR reports as thoroughly as they should? Where are like some of the areas of improvement you would like to see more generally?
Yeah, it's an excellent question. I think, as I mentioned, we did find one VAS that was closing out these alerts where I think it came down to a bit of a culture where they're like, just kind of get through the day, right? Just close them out, and if nothing's awful, like, then don't move on. As opposed to, you want a culture of compliance that's really trying to be aggressive about protecting the firm, not just the clients, which is important, but protecting the firm. And you can only do that if you have people who have a real intellectual curiosity about how it all fits together. And this is, whenever I've hired compliance people in lots of different jurisdictions, and the one thing I always looked for was intellectual curiosity. Like, does someone, knowing the rules is not enough, knowing the tech is not enough, knowing the commercial structure is not enough. You need someone who can swim in all three rivers around that.
Hey everyone, just want to take a couple seconds of your time to thank the sponsor that made this show possible, ACX Compliance, the world's largest crypto specialized compliance managed services provider. ACX Compliance is your one-stop shop for all your crypto compliance needs, from crypto transaction monitoring and SAR investigations to regulatory licensing and remediations. 100% of their staff are advanced crypto trained. 100% of their staff are trained on all the major crypto compliance tools from KYC to transaction monitoring. They're 100% focused on the crypto industry and only work with crypto clients, so they're specialized and aware of the latest practical trends we're seeing. In addition, 100% of their staff are full-time employees. They don't have contractors, and they don't even allow remote work. And they have all the relevant ISO and security certifications to ensure the level of compliance security the crypto industry needs and deserves. They already provide services to some of the world's largest crypto exchanges, custodians, and crypto platforms. If you're looking at scaling your compliance operations or saving on costs, think about ACX Compliance. ACXcompliance.com, ACXcompliance.com. Now, back to our show. And it's difficult because let's say there's a certain flag or you do an RFI to a client. The challenge, like I often reflect on, is even putting the SAR report, for example, together. It can take a lot of time. It can take an hour and 2 hours, right? And as a business, depending on the size and scale of your operation, this becomes always a challenge of how, and you need to think often outside the box. You need to connect the dots that are not as obvious as well when you're just looking at it at the basic level. When, let's say on the broader compliance now that you're seeing with crypto firms, like we still are requiring proof of addresses. We're still requiring firms to submit their ID. Yes, the process has become a bit more smooth now with face recognition and so on and so forth. But how do you see this evolving over the next couple of years? Like, do you think we'll get rid of proof of addresses in the short term?
Yeah, it's a good question. On the TradFi side, where I spent most of my career, there was always this desire that there would be some utility that would help them with kind of KYC, right? No one, for whatever reason, no one ever has been able to step forward and kind of solve that problem. So I think, the digital nature here will help us a great deal, but we're still going to need some of these things from banks and that sort of thing. I do think that hopefully we'll get to a point where, like you think about it here in Dubai, right? We often Emirates card, right? At a certain point, maybe there'll be some sort of vendor or service that we can use to say, okay, if you have these credentials, you're just on a faster track to get KYC'd, et cetera, et cetera. The culture of this space has changed a great deal, right, in the last 5 years. So, it used to be people like the libertarian and anonymity and that stuff, and people wrapped their arms around it. Companies who didn't want a headquarters, didn't want to be regulated. Yep. We've seen an incredible pivot around that. And I think that is trickling down here to, we got, cleaner people coming to the space maybe. That should, for a firm, if I was a compliance officer, it should shine a light that if you have certain clients that, are being difficult by giving information that they should be giving everyone, that's a bit of a red flag on that particular client. Yeah.
I'm still amazed we're still asking for proof of addresses, for example. In this era, a lot of people are mobile, especially when you have government documents like Emirates ID, for example, that can do a lot of the job. On the utility point, it's a good one. I've been wondering about this for many years. And whenever I speak with bank executives in private about the KYC utility problem, they all tell me, we don't want to do it because actually having a barrier to entry to make it more difficult for a customer to open an account plays in favor of the incumbents. Right. If you're HSBC and opening account is very difficult, and at Emirates NDB, HSBC will benefit from that. And it's interesting, in crypto, it takes you 5 minutes to open an account. It's very easy. So that actually barrier has fallen down.
Yeah, you're right. The banks like the moat that's around them, right? But I used to get questions when I was in compliance from my business people saying, the regulators are being unreasonable. Why are they asking us to do this and do that? And I used to say to them, like, every time we say that, the industry would do something stupid, or some firm would do something stupid that would require the regulators to oversteer in a particular way, right? So the hope is in our space, after some kind of bumpy kind of teething issues on a lot of firms in the beginning, now that there are paths to being licensed, now that there's not just an understanding and regulatory clarity around the AML and KYC, but there's tools available to kind of help you do that. The hope I have is that we'll be on a smoother track. Doesn't mean we'll be scandal free, but hopefully we won't have what you see with a lot of the big banks, that there's always some cycle where people have a consent order or something like that.
Exactly. Do you believe in, let's say, the next 5 years, some of the new technologies we're having in crypto, like zero knowledge proof, that I can verify that it's Sean without seeing Sean's credential? Do you think those kind of zero knowledge proof type of technologies will be accepted in the crypto ecosystem, let's say for KYC purposes?
Yeah, I think we'll get there. I think it'll take a few firms to do it at once, right? Yeah. And I do think, the desire that, smart contracts can, not just in crypto, right? That can kind of help revolutionize a lot of what scores of compliance officers have had to do manually, in back offices and that sort of thing. I think we'll get there. I think, it'll take one or two big platforms to kind of roll out effectively. And, I would hope folks who would do that here would kind of work with us to make sure that we understood it. Because then we can kind of encourage it if we get to that point.
I think save a lot of people a lot of challenges. Like, let's talk about DeFi. How do you see, obviously, VARA has been regulating a lot of mostly centralized exchanges, custodians, different kinds of market participants. How do you see the future of DeFi from a regulator perspective? Do you believe DeFi can be regulated? And how do you even think this can be even approached?
Yeah, I get the question. I think, when I look at something like DeFi or some of these other different business models, I don't necessarily think, can we regulate this whole thing? The key is, what are the issues around where we need to over-broker a particular part of the regulation? So for me, for a lot of these decentralized kind of business models, to me the key is always the AML risk around it all, right? Because a lot of those folks are, they're not mass retail, right? Some of them are, if you can enter into that as a business, you're relatively sophisticated, but you could be a sophisticated bad guy, right? And so, how are the firms good or the projects going to handle that? So when I think of DeFi, the first thing I'm thinking of, all right, well, what's your AML controls?
It's very difficult because I can say they can do transaction monitoring and come up with some kind of risk oversight, but because there's no KYC, at the end user level, it's very difficult. Yeah. But at least at the meta level, they can have some kind of idea. Do you believe that will be the standard? Let's say I'm running a DeFi exchange, like I'm Hyperliquid, I'm Aave or any of the other Drift and Pendle and its likes. Do you believe DeFi protocols should have, if not a legal, at least a moral obligation to run some transaction monitoring to get that overall risk?
Yeah, I feel more strongly on a financial crime piece than I do on transaction monitoring, and the only reason why I say is because I wouldn't want to put a burden on somebody when I as a compliance guy myself, I'm not sure if I would understand how to do it when I would set up, right? I think a best effort should be made to make sure that they can police the parties that they've brought together, and but it's a bit like the institutional business, sophisticated people, bigger boys. I'm much more focused on the big retail platforms and the manipulation or potential manipulation around that.
Yeah, no, I can say I think
because I've got to spend my time and
absolutely. The risk is bigger there for sure. So when you look at the decentralized players and the potential, let's say market manipulation is a very good one, right? When I look at the ecosystem, having been in it so long, when I look, especially those shit coins and very, very small, the tokens with very low liquidity, for sure there must be market manipulation. It's obvious in a way. Not obvious, but when I look at it, there's a big chance there's people, or at least insider information or market manipulation. How do you think we can actually combat that? So let's say crypto exchanges, do you believe they can do more? Do you think something regulator can come and do, or is it third parties? I'm just trying to see practically how would we deal with it.
Yeah, so one thing I'm trying to do is we're rolling out some modules around this to kind of focus on a lot of these projects, their native token, right? And potential manipulation of native token. For example, you and I start a project and we can put out a press release that, hey, we just had a, we just met with Eric Trump, or we just met with, some big kind of TradFi player. That native token can spike. Yeah. We're looking at ways. Can we look to see, all right, who knew about that before it happened? When I was at Goldman Sachs, I can only sell Goldman Sachs stock in a very tight window, right? But if you're a token holder, I don't think there's those kind of controls, even at the most sophisticated one. So kind of looking for, event triggers around the fact that, okay, we put out a press release, or a big platform has announced, hey, this week we've just added these 5 tokens, right? Yeah. Who knew that last week? Absolutely. Do you know what I mean? So some of these are kind of, fundamental even from TradFi.
Yeah. It's a very, very good point you raised, Sean, because I can definitely see that being a problem. You work for a foundation of a layer 1, and you know that you have a meeting, like you used the Trump example, but anything else, often it's partnerships or whatever. And because these can have a very material impact on the price. The question is, how do you ensure, let's say I work at a layer 1 foundation, I can have some of my tokens on a self-custody wallet and not disclose it. But, which in TradFi, it's difficult for me to hold my Goldman Sachs shares without Goldman Sachs knowing about it, because obviously there's repositories and firms, the intermediaries in it. That's why, isn't there always going to be an element of good faith in a way? Because again, if I'm the employee at that layer one, I'm holding those, let's say, Solana tokens on my self-custody wallet. No way nobody can know about it. I don't know.
We would look at a market like we'd look at a spike around. In other words, if there's no spike, we care less. Yeah. But if there's a spike or drop down, we would then try to figure out where that trading was done and try to chase the wallet address. Sophisticated people can go hide in the bushes after, but we may try to, once we've tried to chase that, if nothing else, a bit of a deterrent effect as to, no firm wants to be asked about a client where they can't explain to us who they were. So some of that, listen, we want to catch the bad people, but some of it is to kind of put pressure on the folks who, like you said, who are policing their own little ecosystem.
Just want to take a couple seconds to thank our sponsor for today, ACX Compliance, the world's largest crypto specialized compliance services firm. If you are looking to moving to the UAE and getting a VARA license or an ADGM license, think about ACX Compliance. They provide the full one-stop shop support from incorporating your company and getting your visas to getting your VARA application and ongoing post-licensing support. If you're thinking about the UAE, think about ACX Compliance. ACXcompliance.com. Now back to the show. This is like the good old examples of MNPI, material non-public information, or the typical example: the husband tells something to his wife at night about a lawyer, about a deal, and then the wife goes buys the stock the next day. These are the good examples we used to have in banking compliance trainings, right?
But and unfortunately, those examples still exist.
Exactly.
People have not
and definitely happens a lot in crypto.
Yeah.
If it's not the case in TradFi, it still exists in crypto as well. To what extent, Sean, do you believe we can practically use artificial intelligence in crypto compliance, especially from a monitoring perspective? Or do you believe we're still a couple of years far from that?
I think we're going to get there faster than the TradFi folks, right? Because everything's digital, everything is generally digestible for an AI agent. We've got a project we're working on our end. The way I look at it, this is more, instead of having to hire, as I alluded to, instead of having to hire 50 people to scour, we can have these AI agents that can do, and not just on supervision, but on licensing and the blockchain analytics. It's like having new grads who are very smart, don't need to sleep, and are consistent, right? So I'm very, very optimistic around this, and I know the big banks. I was listening to an interview with the CEO of Bank of America the other day. They used to have 300,000 people. Now they have 212,000 people in like a 10-year period. And they're now just getting into using AI. So I think the good news in our ecosystem is we're in the beginning of this trajectory to adoption and broadly speaking. And so we can have these folks come in. It's not going to be headcount reduction. It's going to be more steroids for these compliance departments. So I would definitely recommend people look into this. Yeah. But having said that, if you're a compliance officer, you're in charge of the AI, just like you're in charge of the vendor, just like you'd be in charge of a new grad you hired who messed something up.
Exactly. It's very interesting because you're right. I think I can see AI playing a role in making applications faster and more efficient as well. But you raise a very good point, because the supervision, it's easy, especially like a VARA. The policies, the rule books are there. You guys, there's a very set finite amount of data that is there that you can train the models on. And then if an application comes in, you can easily check what the gaps are. And that will obviously save you a tremendous amount of time, for sure.
That's what we're hoping to get to. Yeah. And on the supervision side, we've got 37 VAS. So, we want to be able to digest their supervisory returns, and not just on wallets or transactions, but financials and that sort of thing. Yeah. And we want to be able to get smarter and quicker around that. If there's any kind of, if one VAS month on month has had a material change in their kind of financial condition, or two VAS that we think would be comparables, one has material difference in the information they're giving us. Right now, it's harder it's harder for us to flag that in a timely manner.
And absolutely, with AI, you can have this instantaneously. It's going to be beautiful, actually, from that perspective. So how do you see the regulator of the future? Do you see as a super regulator like that, where you have X number of staff, but you have obviously a lot of AI and the human staff just look at these cases that are being basically flagged by a system? Like, how do you see VARA in 10 years?
Yeah, I'd say it's almost like what's happening on the like on the equity trading floors, right? Where you used to have a lot of traders, right? And and a lot of them would be in charge of a piece of information. Where now you've got one or two traders, 8 screens. It's very quiet. Things are humming along, but you'll still need humans in there to kind of have an understanding what the data is telling you, right? But I think the regulator of the future, VARA of the future, will be able to focus on the signal, and AI is going to help us kind of cut through a lot of the noise, right? That's what the hope is. So I do think that, because the only way we could scale more firms, build this ecosystem, is to be able to kind of leverage AI tools. This is why we're trying to get ahead of it.
It's going to be super interesting. Like the type of people you believe you'll be hiring over the next couple of years, do you believe you'll hire like the traditional lawyers are coming in, people that work in TradFi and compliance, or be more like prompt engineers or people more on the tech side?
Yeah, I think, there's a desire to say, well, instead of going to Harvard Law School, we're going to go to MIT. And I think over time, though, and this is how I hired when I was in compliance, you don't want groupthink. You don't want, you want a diverse portfolio of experiences and that sort of thing. You want people who, I mentioned intellectually curious, but you also want people who can cut through BS and kind of are not afraid to ask a question. So, I think we'll have some lawyers, we'll have some people with kind of ops experience. I'd love to have people who've been on the infrastructure side. We have a few of those people who understand wallet management and that sort of thing, not just somebody who, went to a top law school and can, I do think we'll get to a point where we'll have, different types of folks focusing on different areas. So I want to bring in someone so we can do more FinOp kind of reviews and that sort of thing. Some of this, so I see the AI tools and reg tech as weapons to help us, not necessarily, the automated tanks.
Yeah, it's so interesting because I really can see how as a regulator you become more efficient, effective using AI in ways that was pretty much impossible beforehand, right? It's going to be very interesting. And you believe that as a crypto regulator, you'll achieve this faster than a TradFi regulator just because of the asset class that we're supervising?
Yeah, I do. I also think just because we start off where it's all digital, right? There's no, if you're gonna regulate, like for example, the LIBOR scandal, which I think that was a major turning point in compliance, and I'm happy to explain why I think that. But there was no automated, that was painful and it took a long time because you had to pull phone tapes, you had to kind of piece different transactions together, et cetera. Our ecosystem is not open outcry at any, and most of what we'd look at we'd be able to piece together once we get the digital puzzle pieces from different players.
Interesting. You believe something like LIBOR, where obviously people were talking to each other, literally rigging markets, right? Do you think that's possible in crypto as well?
I certainly think you mentioned like the lower liquidity coins.
The tokens,
right?
Shit coins.
And I do think, in the in the genesis of the ETFs, ETFs they ultimately you need a closing price, you need a reference price, right? Yeah. So whenever you need a reference price, whether it's the LIBOR contributions or whether it's the Bell, the New York Stock Exchange, you're going to have conflicts of interest and people have incentives to kind of do bad stuff. I do think so. I'm also trying to get a sense of, all right, well, how do we guard against that? A big part, and I've mentioned this before, is if we want to get real adoption, we all have to collectively, we have equity, stake, and police in this ecosystem, right? Mm-hmm. What we don't want is the big banks or the big hedge funds or the big real money to get involved in the space, get burned, and tell all their friends and tell the media, I'm stay away. It's too wild, wild westy. On the LIBOR piece, I do think the reason why I said it, I think it changed compliance immensely, And I wasn't at a firm that was involved in that, but and simply because we weren't a contributing kind of library member. But it took compliance into really like organizational behavior. It was more. It wasn't about rules and policies anymore. It was about what kind of behavior is out there, right? We used to say there were compliance-free zones, compliance-light zones in different parts of the firm. I think after LIBOR, everybody said, well, there cannot be any more compliance-free zones, as well as the firms that had gotten hit by that ended up it was a quantum leap of compliance technology and programs where folks that had kind of somewhere maybe compliance was a sleepy backwater, invested literally millions and hired a lot of people and then hired the tech.
Yeah, it's completely changed probably since then and afterwards as well. What do you know when, Sean, when you're meeting other regular regulators, not crypto related, how do they see you as being a crypto regulator? Like how do they, what questions they ask you, or like, what's the interaction? How do they see VARA?
Yeah, they're very curious, usually when I meet them, right? And I mean, when I meet them as the guy who spent 25 years as a compliance officer in Trad 5, dealt with a lot of regulators, I do kind of speak their language a little bit. So, and I've got lots of friends that do those kind of jobs. So, yeah, the first word that comes to mind is curious, as what we do. And, I believe sharing is caring. So I kind of, I highlight our approach, highlight things we're trying to do better and that sort of thing. And I do learn a lot from them and how they look at it. The real interesting aspect of those conversations is there's these different ecosystems, especially in the big money center cities right now. You and I were in Hong Kong, so I was there relatively recently, and it's very interesting the sophisticated kind of ecosystems that some of these regulators sit on top of. For us, we're helping drive a sophisticated ecosystem. Like it's not a knock on any other regulator, but there was a real desire by the Dubai government to kind of build this out and build it out in the right way.
Correct.
It wasn't something that they woke up and said, "Hey, we
got to deal with this."
Yeah, exactly right. And so that has given us a bit of an advantage in how we go about things. But it also, it's good. It's good pressure for us to kind of, make sure that. I always say regulatory clarity has got to be our religion, right? I think for some of these other regulators, some of them, and I won't name places, but some of them still have this political overlay. Is this a good space or not? Is this something we should encourage? I think the let's stamp it out crowd has lost, right? But, being a little more pro virtual assets and having a regulatory path is quite different. And I think but it's a good sea change in just about every regulator I talk to, which is why a lot of them reach out to say, "Hey, we've been tasked to do this. Can we talk about how you guys handle it?" But we have our own lessons to learn too, and we learn every day.
Recently, following President Trump's visit to the UK, the UKFCA and the US announced that they're going to try to collaborate on a transatlantic basis to, let's say, develop the crypto ecosystem in both countries. Do you believe crypto passporting will be possible, let's say in the next 5 years, between the major crypto jurisdictions, let's say the US, Europe, UK, Hong Kong, Singapore, the UAE? You think some kind of passporting will be possible?
Yeah, my personal view is I'm quite optimistic around that. I do think it'll be less about the safety of the space. It might be more about, quite honestly, geographical rivalries and that sort of thing. Yeah. So I hope that, when you see announcements like that, where there's a bit of a, at the top of the house, a clear signal that this is the direction, I think that's quite helpful. But a lot of governments, they're trying to build, they have their own cards they're trying to play in terms of their own economic and capital market development. There's certain players, incumbent players in their own markets that are quite maybe political powerful, et cetera. And we talked about the moats around the banks and that sort of thing. So some of that, I think the regulators won't be the ones pushing that in front. I think a lot of that'll, just be obvious that firms want to do this and, do things like shared liquidity that are better for the clients and that sort of thing.
I mean, the liquidity sharing. I think will happen. It's a matter of it doesn't make sense otherwise not to. Were you surprised of some of the speed of change that we've been seeing, in, let's say, particularly with the U.S. when you look at it from as a regulator, and the speed of it's mind blowing how quickly things are changing. Are you surprised by it, or did you expect it? Are you afraid it's moving too quickly? Like, what's your view on it?
Well, I can speak not as VARA regulator, but as an American, taxpayer and citizen.
Yeah.
I am quite surprised, kind of pleasantly surprised that I think because where the U.S. was, it was negative to kind of skidding, right? And so I think having some of that clarity, I think is a good thing. I think there's certain aspects of the change. I think I'd like to see a little more measure, probably. Again, in my own views, but I think it's only helpful for our ecosystem, right? It'll be interesting to see where the individual regulators kind of land on this in the U.S. and beyond. But I think it's a good thing.
It's incredible that we're here in 2025 even asking the question whether it moved too fast. This was a question that was unthinkable a year ago, right?
Exactly. If we were here last year, I don't know what kind of conversation we'd be having about.
Yeah, it's incredible how quickly it moved. I know we're coming to an end, but I want to ask you also about scams. So a big problem that I see, even people, my followers in my audience, and people follow my content, is scammers, fraudsters, people impersonate me every week, but I'm seeing increasing levels of pig butchering scams, love scams, and unfortunately for a lot of people, their first interaction with crypto is via scams. What's been your impression so far that now you're in a regular role? I'm sure you must hear tons of stories like these. What are the biggest problems you're seeing on that, let's call it the fraud and scam world? And what do you think crypto firms can do better to police that?
Yeah, and we've got an enforcement arm that kind of handles a lot of this type of thing. We deal with the Dubai police quite regularly around that. But I'd say, what firms can do, and a lot of them are doing it, are not just making sure customer information is protected, not just from a cybersecurity standpoint, but who has access to client data. But I'd also say one thing they do a very good job of is education on their websites and that sort of thing, right? And to highlight to people, the challenges around being in the space, et cetera, et cetera. I think because it's new to a lot of people in the world, unfortunately, a lot of people have succumbed to, especially because some of the key assets in the virtual asset space have gone up so much. There's a bit of a FOMO, and quite honestly, some people who are uneducated or meaning uneducated in space, and might be a little greedy, thinking that they, So I would tell everyone it's really important, to do your homework. This is a very volatile asset, and if you're in here to make money quickly, you're going to succumb to people who prey on that kind of person.
It's quite sad. I hear sad stories every week, and it amazes me how people are falling still for these things. If somebody promises you 100% return a month, it's definitely not that.
That's right. Yeah, and every asset class has gone through this, right? It's just because I think of the appreciation of especially some of our flagship kind of assets in the crypto space, as well as, like you said, these meme coins, et cetera, kind of ripping through. I do worry people are kind of susceptible to kind of being taken advantage of. So I think like your other podcast and that your show, I think it's good where people like you and the big firms will break the space down in a ways people can understand it. Not like here's how you get rich tomorrow.
Yeah. Education, I'm still amazed how much work there needs to be done on the broader crypto ecosystem, education perspective. Last question, Sean. What's keeping you up at night from a crypto regulator perspective? What is the one thing that you're like, shit? I think we should spend more time looking at this overall, globally, not only in Dubai, but let's say overall that keeps you up at night on the crypto regulatory perspective.
Well, I do hope. You mentioned FTX and the financial health for some of these companies, especially with such a volatile asset. A lot of people are talking about and I won't talk about the firms here, but I do worry that as markets are trading in abnormal fashion, U.S. stock market is very high, but gold is very high. I think it's there's an engine light on here somewhere. So I hope some of our players have learned from the crypto winter, like what that feels like, and in particular how to educate and manage their clients on the downside. Because to your point, you go on Twitter and there's still lots of people who think it's infinity and beyond. Having some sort of measured kind of discussion around, this is an asset class that's going to be around for a while. It's going to have peaks and valleys.
Let's see. There's a lot of work to be done. Sean, as we end, my best friend, the bell, is here. And I want to ask you quick questions, and I want a 1 or 2 word answer, and we're going to go through them. And the bell is the regulator is actually the bell now, not us. Ready?
Yes.
Here we go. Sean, you've been now in Dubai for over a year and a half. What's your favorite thing about Dubai?
It's easy to meet people.
Easy to meet people. Good one. You spend a lot of time in Hong Kong and Asia. What's the one thing you miss the most about Asia?
The food.
Food. Oh, there's good
and
restaurants
my friends,
now. And your friends.
Yeah.
Somebody wants to learn about crypto compliance. They have the choice between these couple of roles: the regulator, sell side role, buy side role, both compliance, sell side, compliance, buy side, or a consulting firm. Where do you recommend they go?
A regulator.
Regulator.
Yeah.
There you go. Not many places to learn from. Here you go. Yeah. What's the one thing you wish the crypto community would take more seriously than it does now?
Maybe it's more on the marketing side. I think maybe less hype on the marketing.
If you could go back to school today, knowing what you know about the future of finance, what course would you take you wish you had taken before?
Wow, that's a really good question. I think I would take statistics more seriously.
Statistics, interesting.
Yeah.
Interesting,
Yeah.
huh? I think I'm very relevant now. And
I took it. I would take it more seriously. Yeah.
What's the best piece of advice you've received that you think has had a meaningful impact on you?
From my father. My father's a medical doctor in America, but he was an officer in the U.S. Air Force, and he once told me, he said, I can't give you advice on business. He said, but when he was in the Air Force, he said, you would think that no one wants to go to war. He said, but there were people there who were hoping to get sent to certain theaters because that's the way to become a general, right? I never really understood that. And when Goldman Sachs asked me to move to Asia, it clicked. I thought, in compliance, that's where our war was, right?
Yeah,
and so by following that, I was able to get MD and partner in a way and on a trajectory I wouldn't have gotten if I played it safe in headquarters in New York City.
Interesting. Yeah. So good, huh? It makes you reflect. You're right.
Yeah.
Last question, Sean. This is the question I ask anybody who comes on my TV show, on podcast. If you could have lunch or dinner with one person dead or alive, lunch or dinner with one person dead or alive, who do you have lunch with?
Well, I love history and I'm interested in world religions but if I'll be honest with you, my mother passed away 10 years ago. She was a hilarious person. She was always good content over lunch or dinner. It'd be my mother for sure.
I'm sure they'll be very proud to listen to you now today. That was Sean McHugh, the head of market assurance at VARA. By the way, I have another interview with Sean on my CNBC show on Crypto Weekly where we talk more about VARA. You'll find it on my YouTube page for those interested. Thank you very much. Hope this was an insightful interview. One thing you can do to really help us, if you actually follow us, subscribe, rate the show. That will help actually more people that are interested about crypto compliance and the future of money to discover the show. I would really appreciate that. Thank you very much, and see you all soon for another special episode of the future of crypto compliance. See you guys soon. Hi everyone. Hope you found this episode interesting and insightful. Can I ask you for one little favor? Can you go on my YouTube page and actually subscribe to my YouTube page, Henry Arslanian, or if you're already there, just like this video. That would really propel the algorithm and allow many more people to discover our show. If you're listening to this in a podcast format, I would really love a 5-star rating. Again, that really is a small step for you, but has a massive impact for us content creators. Thank you very much, and I hope you found the show insightful. If you have any suggestions for guests, topics, or any new format that you want me to deliver the content that will make it interesting, insightful, and educational, please let me know. You know how to reach me via email, via LinkedIn, X, and all the other platforms. Thank you very much, and see you guys soon.